Well, Wall Street strategists are abandoning their bullish views on the U.S. stock market in droves as a sell-off in reaction to President Trump's reciprocal tariff announcements has experts rapidly paring their forecast for 2025. Joining us now, Yahoo Finance's Josh Schafer. Not everyone is cutting their forecast, but we'll get to that in a moment.
Sure.
Because most of the strategists that you track are, and you have on yahoofinance.com a handy-dandy chart looking at the various forecasts and who's been cutting.
Yeah, Julie. So I guess I'll instead of going through all the numbers of where they were and where they came down to, basically everyone was above 6,000 to start the year, and now you're starting to see a lot more people come down, right? So you have JP Morgan at a street low of 5,200, which I think is roughly where we closed today, somewhere around there. Sorry, no, a little bit lower today. But 5,200 for JP Morgan, Stifel's at 5,500, RBC Capital Markets now also around 5,500, Evercore down there, Goldman Sachs, Bank of America, Barclays, Oppenheimer, all of the names I just read are now below 6,000. And so really the broad takeaway here obviously being two key things, I think. One, when you have this big of a drawdown, just simply to argue that you can rally that high back up to a target that used to be 6,500, you're starting to call for a 30% rally in stocks out of here, which starts to just feel a little bit aggressive, I think, at some point. And then I think another key point that a lot of strategists are making is we're just not getting out of this that soon. And I think when you think about sort of how the trade war is playing out to this point, the escalation that you're seeing from some countries, thinking about the US and China right now, you haven't heard from other countries, you haven't heard about negotiations. And so I think it just makes the street in general feel a little bit less confident in calling for a massive rally in stocks when there's just so much uncertainty at this point.
Yeah, well, I mean, how closely do you watch these forecasts from these strategists?
I always like to watch them because I like to see, kind of where they start out and where they end out. Sometimes they don't really change much if nothing significant happens. Mm-hmm. But based on what we've seen over the last, couple of weeks, let's just say, but certainly the last 3 days, I can see where it's going to cause a lot of these estimates that were way in the 6,700, 6,500.
Some 7,000.
Yes, some close to 7,000. It's just not going to get there, at least this year. And so they have to be realistic and pare it back. How far they pull it back would depend on, look, where did we close tonight? 5,100 or 5,000?
Little short of 5,100, yeah.
Right, so a 10% move up from there is going to take us to 5,500.
Right, yeah. So to get to those high numbers we were talking about, right, over 6,000, one street analyst, Julie, that we follow closely, Brian Belsky over at BMO, he's still sitting on a 6,700 call. I mean, that's over a 30% rally from where we are right now.
Yeah, that might be difficult, but I'll tell you, if we get some really positive headlines, you know how it can happen. Yep. The same way they took them down, they can take them up 5%, 5%, 5% in 3 days. Same way they took them down.
You know what? Let me ask you something about this, Kenny, because you probably know. I saw something about this commentary over the weekend that some of the velocity that we saw in the declines had to do with market structure. In other words, the financial crisis, you did not necessarily, I mean, yes, you did see magnitude of huge declines, but now you have sort of an options overlay on top of the market. So what does that do to the regular market action?
Well, I think it adds more complexity to kind of the market action because you can hedge it so many ways. You can play 1 day options, 0 day options, 3 day. It's crazy what you can do. So it adds more chaos, I think, to the equation. But to the point, or at least from my perspective, after having spent 40 years on the floor of the New York Stock Exchange, and with the technology today, it's the speed at which the algorithms can make it happen that cause. And look, the sell algorithm, once the sell algorithms ignite, the buy algorithms understand that, and they just withdraw their bids and move down to lower prices. So there's this void in prices, and suddenly they just collapse. Well, the same thing's going to happen on the way up. If we get a couple of good headlines, and suddenly it looks like it's all positive, the sellers are going to be exhausted. They're going to go way higher, and the buyers are going to take it right back up again.
We saw maybe a sample of that action this morning. When the headline didn't end up being real, of course, but you saw the NASDAQ shoot up almost 4% in about 5 minutes.
In about 5, I think it was 5 minutes was the max, right?
Right.
And you see how quickly it can happen. And if that was true, then there would have been another positive headline on the back of that, and you could see how they could take it right back up.
And to sort of tie in what the bull case still is at this point, right? So I mentioned that 6,700 target from Belsky. Yeah. His point is exactly what you were just saying, Kenny. He said, I do not think Donald Trump is a president that would want a recession to happen under him and want the stock market to do this. At some point, he's going to step in, and when he steps in, it's going to be a big move.
Right. See, so I agree with Brian.
Yeah, exactly. And so I think that's sort of where people are teetering right now is at what point does he step in, and how low is the S&P 500 at that point if we are waiting for a Trump put?
Yeah, I think the S&P is finding its it's chi, right? It's finding its calmness right in here at that 4,800 level, like Keith said. I think that is a level, and that would still leave us, by the way, in a structural bull market even if we came down to 4,800. So, and I think people need to understand, and I do think that the retail investor is getting more used to this idea that we can have this erratic behavior and it's not really the end. I think there are certainly some people that remain nervous, but there are other people that say, I had a lot of clients that say, I want to put more money to work. I want to put more. And I was the one saying, not yet. Let's just slow down a minute. Yes, we're going to put more, but not yet. Let's just let this settle in.
All right, well, we'll see where that equilibrium, the chi.
We all got to find our chi.
That's right.
Of course, always.
All right, thanks, Josh. Appreciate it.